Earlier this week, Arabica coffee beans hit a 26-month high, with prices rocketing due to weather conditions in Brazil. The drought and forecast of more bad weather has hit the world's biggest coffee producer hard. Joining me on the line is Jeffrey Kennedy, Chief Commodity Analyst at Elliot Wave International. Jeffrey, do you see prices continuing to be bullish?
On the short-term front, I do like still the upside in coffee. In fact, I would probably say my critical support level is 188.5, and that's basis the July contract. And I would actually like to see coffee push a bit higher here, again, over the next 2 to 3 weeks or 1 to 2 weeks, up to about, say, 228 through 232. Once we get to that area, I think coffee is going to be extremely vulnerable to a decline, most likely into July, primarily due to seasonal pressures.
At the moment, the surge in the price of Arabica hasn't translated into higher costs for consumers. How much further down the line do you see this happening?
The end users like Starbucks and McDonald's will take any advantage they can to raise prices for consumers. So I think the answer to that question would be absolutely yes. But I think the bigger story here in coffee is I don't see the current move in coffee to the upside here as long-term sustainable. Times change, things change, and really, as far as from a technical perspective, I think there's an interesting backstory to coffee. One thing that I have noticed about coffee prices is that after a very big move up or extreme high in prices, such as that occurred in 1977, 1986, 1997, and again in 2011. If the investors or anybody who's interested in coffee simply looks at the long-term price chart of coffee, they'll notice something very interesting and very subtle about that price action. Typically anywhere of about, say, 30 to 35 months after the extreme high in prices, another top occurs. And currently we're working our 35th month of between the last actual high in 2011. So I really think that as we move into May, we will see prices cap out about 228, 232. And then at that point, it's going to be a very interesting market because if history repeats itself, and I tend to think that it possibly will, then we will actually see coffee prices fall back below the low that we saw in, I believe it was October, November of 2013, last year's low.
With all this in mind, Jeffrey, where are you pitching Arabica in the short, mid, and long term?
Again, on the short term, I do like the upside, 228, 232. My critical level, my line in the sand, or where I'm wrong, or where I would run protective stops would be the 188.5 level. If things get exuberant or crazy, we could push as high as 255. But other than simply being short-term bullish over the next, say, again, 2 to 4 weeks, I really think I'd be looking at these levels that we're currently trading at, again, considering annual seasonals as well as that longer-term cycle that I previously mentioned in coffee, that I really would be focusing more on shorting opportunities long-term. I would probably say the most important thing would be to do just simply be watch and wait. Again, short-term, I do like the upside, again, for the next few weeks as we push up to that 228, 232 handle. But once we get into that area, that's when I think things are going to get very interesting. So if investors have been long coffee, then I would be very diligent about managing risk in the position because if things don't go well by, say, the end of May, 1st of June, we could see a very significant and sizable sell-off in this market. And I think that's the danger here. Downside risk.
Thanks, Jeffrey. That's all for this edition of Commodities Corner. Goodbye.